Well, absolutely. I think that's going to be the big focus for investors in 2025, as you mentioned, is what this second Trump administration will look like. I think the biggest unknown quantity surrounds the tariffs in particular. We know those tariffs are coming, but what we don't know is the extent of those tariffs and what sort of retaliation we might see. I think there's a sort of a general sense that we might see history repeat itself maybe. If we look at 2017, actually we saw a lot of bluster, a lot of threats, not so much action. But actually, if you look at some of the appointments he's made in his cabinet, we know that Trump sees these tariffs as a sort of two-way street. He uses them as a negotiating ploy, but also he sees beyond that. I think that's a big cause for concern for investors, and one of the reasons why we think we see weaker growth next year as a result of these tariffs, particularly in Asia, given his hardline stance on China.
Let me try and paint a different side of it, Matt, as well, because I understand what you're saying, and we all have concerns about what it means. But actually, if nations around the world have to spend more money to support their industries and actually build up domestic and local capacity because they are concerned about what is being done in the States and getting left behind, for instance, defence. This isn't necessarily a bad thing for markets, for economic activity. If, for instance, we can see the Germans weakening their fiscal rules a degree to spend more money. Actually, some form of galvanised economic activity from China to Berlin, etc., etc. That's not a bad thing for the global economy.
Well, I think there's room there for opportunity. I think there's, possibly these tariffs could lead to some of these countries seeking out alternate trade routes or promoting their domestic production. But these things take time. I think that's a big concern, is that these changes are not going to happen overnight. And if Trump goes big on those tariffs early, that doesn't give countries that much time to sort of to reconfigure and to look at alternatives.
What does it mean? You are head of market strategy. Give us your broad brush on what you're advising your clients to do.
Well, I mean, so we're focusing predominantly on currency markets. So our big focus going into this year is surrounds the Trump administration in particular. We're looking at to what extent is the Trump presidency priced into the value of currencies, particularly when it comes to his tariffs. To what extent are markets bracing for high US inflation, higher Fed rates for longer? We would say to an extent a lot of that is priced in, but there's still some room to go, we think, in this dollar rally in particular. Again, particularly if Trump goes big on the tariffs, particularly if the Fed indicates to markets that actually maybe it's not ready to cut rates at all for the next few months. We think there's a good risk that they could wait at least till mid-2025 to find out more details of what Trump 2.0 will look like, and actually that there is some room potentially for more dollar strength.
It has been a year of progress for the dollar. It's up 6.4% year to date on the dollar index as well. It's been a steady incline rather than a violent incline as well. Is that what you're calling in terms of upside for 2025?
Yes, as I said, I think we've seen most of this Trump impact largely priced in, and markets are now only pricing in, I think it's around 35 basis points of cuts from the Fed next year. So actually, I don't think there's massive room for more dollar strength. But I think there's possibility we see further modest gains. But particularly if we were to see, say, a slowdown in global growth, if the US economy was to continue to power ahead, we've seen some good data out of the labour market this year. If that was to continue into next year, I think there's still reason for dollar upside, but not to the extent that we've seen this year.